The key is, right, so what's the first goal as a trader is to preserve capital, and that's what you're doing here. You're preserving capital. You're not losing. When you're losing, you're not losing much, right? And you're able to recover those from those losses, which is a great sign. It's a great sign, right? What we need is now consistency in your trading, okay?
Yes.
And that will come over time. So these are stats only from May, I believe. Yeah, so it's only been over a month or so. Okay. Good trade. So let's go. It's your P&L. Okay, so let's go through that P&L over here.
P&L, you can go on the next page. Yes.
Yeah. Okay. So straight away, just looking at your winners are larger than your losses. That's a great sign there. Okay, so you're maintaining losses of $10 to $12 in this region over here. Okay, your risk averse, which is okay. That's your risk profile. You're not taking lots of aggressively, a high percentage risk on the account you have.
No.
So you're taking somewhere between $10 to $12 risk. Rewards wise, if you look at the sort of the positive trades, your return on average has been 1-to-1, sort of matching your losses. But in some of them, you've taken larger wins as well. You've taken some larger wins. There's a couple of sort of break-even type of trades as well. That's fine. So that shows you're doing good in trade management. But I mean, there's one thing that really stands out for me here is the fact that you have a series of losses. And when you have streaks of losses, I can see you've got sort of 5 trades here, a couple of break even, and another sort of couple of losses here, and then this little patch here. Okay, so when you have these streaks of losses, it's important, right? Maybe you have a specific rule, such as if you have 2 losses in a row, 3 losses in a row, the next trade after that, you reduce your risk. So over time, when you have these streaks of losses, it gets tapered, right? So the amount of loss that you're taking is less over time. And you're not each time taking $10, $11 loss, right? Which adds up, In total over here, you could say if all of these were $10, you would have lost like, $70 to $90. So, I would look to reduce that. And that's by adjusting your risk. Reduce the risk, especially when you have 2 or 3 losses in a row.
Okay.
Okay. Looking at good trade, let me just zoom into this good trade. Just give me a second. Okay. So here's a good trade. So we got EuroCAD, 5-minute time frame. You're looking at the Heikin Ashi charts. How come? Why are you looking at the Heikin Ashi charts?
Was first I heard about that was with Ron Williams.
Yeah.
And he just spoke about it somehow, and I was like very interested, so I take a few. I look at the internet to see how can that work, and if it feels good and it suits me.
Yeah.
And it was at the time just after the COVID crisis, the beginning of the. So I was very unconfident about my trade, and it was a good period to change my trade plan because I didn't follow it anymore very well. So I wanted to change, and this was I found it very interesting because it showed the average of the trades, and it's more like. For instance, on this trade, it's more visible that there is a down trade, and I feel more confident seeing that maybe more waves. That's why I wanted to.
I mean, visually, it's a little bit more clearer what the direction is, right? You can see all the way. I'm pretty certain most of these won't be just bearish candles, right? So these red candles that you're seeing, right? So it sort of cleans the sort of candlesticks based on where the current price is compared to the previous candle's price, right? And the close of that candle. Okay. So let me just look at the setup. So entry at the break of ST meaning?
Super trend. The blue and yellow line.
Okay, yeah. Okay, so using the super trend sort of indicator. So price breaks through the super trend. Right. Stop loss above the most recent high. of that previous spike high. I would say, you've got to be a little bit cautious. You can't be exactly at that previous high because sometimes it comes back to retest, maybe spike through, and then eventually continues in direction. So do allocate a buffer. But yeah, in this case, it's quite good. Okay, stop loss above the previous high. You've got parabolic SAR that I can see from there, and it's above that, the turnaround for the super trend indicator as well. Okay, great. So there's 3 reasons, not just 1 reason. Okay, and target. Your target is set to, why was it set here?
It was a previous low. Maybe I can show you. Oh, I don't think I will be able to show you who is automating. It was a previous low,
Yeah.
so it was main support.
Okay. You've got to remember there's other regions as well that you've got to target it first, right? So you've got this previous swing low, so there's previous
Yes,
low, and then you've got sort of, in this, yeah. So, it's important as a trader you set realistic targets. The biggest reasons from a technical standpoint that I see, traders fail is either they've got too tight stop losses or they've got too far away targets, unrealistic targets. So set realistic targets and have a buffer to your stop loss. That's crucial.
Okay. For the first one, in fact, I saw it, and I didn't know if I needed to take my target to the first support or the second one. But the first one was not a really big one. It was present on the 5-minute time frame, but on the 15, it was not so present, not so important. So I decided to put it here. And when the price reached the first support, I moved my stop loss to 0 pip.
Perfect. Yeah.
And then after the small break, there was a break plus a retest.
Yeah.
And it was just before big announcement. So I decided to move my stop loss right above the first the last support.
Okay, good. Something that I want to sort of also mention here is, okay, you've extended your targets based on these technical reasons, but also before a news announcement, which is a great decision, right? So, by leaving that chance that it could, yes, it could go further and, make even more of a profit, but also just as quickly it can go massively against you, and the spread alone, you may not even get out at where you expected to get out in the negative, right? So it's always wise, if you're not trading the news announcement, don't be looking to hold positions into a news announcement unless it's a longer term trade, especially for day trades. Yeah.